Hello, everyone. Thanks for joining and welcome back. Our guest today is my good friend, Adrian Day. He is from Adrian Day Asset Management. And, he's been on here before, but I wanted to get him down to talk about everything that's happened in the gold and silver markets, and the overall markets. Adrian, welcome.
Well, thanks for having me, Ivan.
Yeah, it's a huge pleasure having you back down. Like I said, let's get right into it. Last time you were here, gold was a lot lower than it is right now, probably about $200 lower than it is now. And since then, it went up to $3,500, hit a new all-time high. Now it's lower around the $3,300 range. What are your thoughts on gold and silver right now?
Yeah, I mean the shoot up to 3,500 was probably just a little bit overdone. I mean, way above trend, and all the momentum indices and so on metrics were overdone. But I mean, when you look at it, I hate to break this to you, but we're at 3,240, not 3,300. But I mean, that's like a 7% decline from that peak, which was
Right.
a intraday peak. So that's really not so bad for a pullback. I mean, I would say that there's a reasonable possibility, but in fact, we have further to go on the downside. I mean, number one, as I say, gold went way above trend in that period, well, in April, basically, way above trend. Number two, you've got increased concern among more establishment types, meaning JP Morgan and Goldman Sachs and Bank of America and so on. But the US is heading into a recession, and often at the beginning of a recession, and I emphasize at the beginning of a recession, gold is often weak. I mean, we can argue or discuss, gold being, quote, gold being different this time, dangerous words. But still, at the beginning of a recession, gold is weak. And so if you're an establishment with an establishment bank like Goldman Sachs and you think there's a recession coming, your immediate reaction is to sell gold. And then the third thing, of course, is there's a slight thawing in the US-China tariff conflict. It can hardly get any worse. And so if gold has responded to that, it can hardly get worse. So it might get better. And that, of course, would be negative for gold. So for those reasons, I think, we might see a bit of a pullback. But again, honestly, and the same will go for silver, because silver and gold have really marched in lockstep the last 6 months, pretty much in lockstep. Yeah, but the fundamental longer term drivers of gold and silver remain, and they remain overwhelmingly bullish. So, a pullback, to me, a pullback would actually be healthy, just to sort of cleanse, if you like, some of the excess speculation, some of the weak hands, and so on. And I've talked a lot. I'm sorry in
No,
answer to your,
no, no.
but I would say that I joked about this time being different. Of course, dangerous words in the investment lexicon. But I would posit that there really aren't that many weak hands in gold right now. I mean, the
Right.
people who've been buying gold and really driving gold are longer term strong holders, and what some people call the tourists. They haven't really jumped on gold. The only weak hands, I think, are the hedge funds. They see something going up and want to capture some of the move. And I think some of those are already out, frankly.
What about the GDP numbers right now, Adrian? A lot of people are talking about lower GDP numbers. They're talking about trade deficits and what's happening there, and how it's ballooning. What are your thoughts on that? The GDP and the trade deficit.
Yeah, well, as I say, I mean, as we talked last time and probably the time before, I mean, I think the US economy has been heading to a recession, and that's completely independent of Trump and his tariffs. And so perhaps tariffs will be the trigger, And they will certainly, everyone, all the press and media and everyone will blame tariffs for the recession.
Right.
I view the recession was coming anyway. And you know what happened in the first quarter? The first quarter results are not really the result of tariffs or tariff talk and so on. I mean, it's too soon. So April will give us a better indication. But as I say, I mean, I think we were heading to a recession anyway, so it's not surprising to me that the GDP contracted, and you know, I think we'll get a second quarter contraction. Tariffs will only exacerbate it or aggravate it, because of course, what tariffs do, people talk about tariffs being inflationary. That's not true. Tariffs reduce the spending. I mean, it hurts consumers in the country that imposes tariffs. So if instead of paying, you know, $10 for something, I now have to pay $14 or $13, well, at the margin, there will be people not buying it. And so the GDP goes down. I mean, it's really quite simple. It's not inflationary because inflation comes from the Federal Reserve creating money. And
Yeah.
if you raise the price of certain things, but you haven't increased the quantity of money, then people buy less of something else, right? I
Right.
mean, it's,
That's just inflation.
yeah, but I mean, it's not inflation. If the price of French wine goes up, but everything else stays the same, there's no inflation, because if I want to buy a bottle of French wine, well, I reduce my spending on something else. So
Right.
that's not inflationary. You can only have inflation, which is aggregate price increase, if the Fed has increased the quantity of money.
And now a message from our sponsor, Juggernaut Exploration.
One of the more exciting ones, I think, is Juggernaut. I know some people say, well, lightning can't strike twice, and but look, I think one of the things you got to reflect on is that some of the guys who work here at Juggernaut are some of the same geologists that basically found and have now advanced sherbet at Goliath, okay, over the past years. So they have a very different way of thinking about exploration in the Golden Triangle than most other geologists, okay? And they've gone out and they've identified what could be another sherbet type target here. And the size of these veins is absolutely jaw dropping. My hunch is these guys are onto something pretty special.
The link in the description is right below for Juggernaut Exploration. Now back to the episode. Do you think what is Trump
Which
going
they
to
have,
do?
which they have. Sorry.
Right, right. What do you think Trump's going to make Powell do? There's a lot of talk about him recently, criticizing Powell, and are they going to, he wants him to lower the interest rates. Is he going to do it? Like, what are your whole thoughts there?
Yeah, I mean, in many ways, I think, gosh, who am I to? In many ways, I think Trump is playing this wrong, because it is making Powell's back go up. And so, in many ways, I think the Fed is likely to be more resistant to lowering rates simply
Right,
because they're being told to lower rates.
right,
I mean, the Fed under Powell, I think they've been reluctant to ease rates really for the last several months, because they know that inflation is not under control. They know
absolutely.
that. And so they've been reluctant to lower rates. But the Fed, I mean, President Trump just, sort of, well, I'll use the word bullying Powell, I think backfires. It only makes him less likely to do it. What I do think we're going to see, I think we're definitely going to see more QE. The Fed creating money to purchase government bonds. And they're going to do that because basically they have to, because the number of willing buyers of longer term US Treasuries is dwindling to vanishing point. And so the Fed is going to have to do that. And as we've talked about, as everybody knows, the U.S. debt financing is really heading to a crisis point. The TGA has been boosted this month, and a lot of people I'm reading are saying, "Oh, look, the crisis is over, the TGA is up." That's only because of annual tax increases. That's going to all be dissipated by the end of July. And then we're going to go back to those low levels of basically, it's basically empty. Jenny Yellen left that basically empty. And then the Fed is going to have to step in because China's not going to buy our bonds. Japan's not going to buy our bonds, I don't think. They might buy some, as a sop to the US, but, they've been reducing their purchases, but China's been stepping up its selling. Even if China is not the big mystery seller that everyone's talking about, and we don't know who that is, even if it's not China, China has been stepping up their selling for the last several years. Regional banks are not going to want to buy treasuries.
Right.
You're really left with, institutions like pension funds and insurance companies that have to have long dated debt, and you're really left with the Fed.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. I was looking something online about Warren Buffett. Does he own 5% of the treasuries or is it 5% of the bonds?
I don't think he owns 5% of long-term treasuries. No, I think he's more. I'm not sure, and I'm open to.
Yeah, Warren Buffett owns 5% of all US Treasury bills, a larger holding than the Fed itself.
Yeah,
He has 300 billion in T-bills.
that's T bills.
T-bills, okay.
He's very short end now. Yeah,
Yeah. What do
and
you
that
think
makes
what do you
sense.
think about that?
Sorry.
What do you think about that with
That
Warren
makes
Buffett?
sense. If you simply can't find, I mean, we do this on a much lower, lesser scale than Warren Buffett. We do this in our own business. If I can't find good investments to make, then I put that money into treasury bills. I mean, 1 and 3 month treasury bills right now, which is all we're buying. We're only buying 1 and 3. For the occasional client, we'll buy 6 months, but mostly it's 1 and 3 months. I mean, if you can't find anything to buy, 1 and 3 month T-bills are a good parking place right now. And that,
What do you think he's making on 300 billion? What percentage on the 3 month?
well, it's close to 5%.
No, that's crazy.
That's real money.
That's real money. Yeah, he still drives his 2013 Cadillac too.
I'll take just the interest on the interest.
Exactly. Well, Adrian, it's such a huge pleasure having you come down to the silver and gold community. Before you leave, though, I really want people to connect with you and follow your work and also follow Adrian Day Asset Management. I'm going to put the link in the description below, but where can people follow you, Adrian?
The best place would be www.adrianday.com.
AdrianDay.com.
And sorry, Ivan, just before we go, let me just emphasize one
Sure.
thing.
Yeah, yeah.
Gold has been remarkably resilient, remarkably. The gold stocks have also started to be quite resilient, even on days when gold is down. So the message I would leave people with is if there is any kind of pullback, I mean, I wouldn't wait for a 20 or 30% decline. Any kind of pullback should be bought, in my view.
Abs Absolutely. You heard him yourself, everyone. The advice that you give us, Adrian, is so immense, and it's such a breath of fresh air having you come down. Seriously, it's a huge pleasure. Everyone watching this, please hit like and subscribe. Please go to www.adrianday.com to follow Adrian at his work. And Adrian, as the market develops, would really love to have you back on soon.
Excellent. No, love to, Ivan. Thank you so much.
Talk to you soon.
Thank you.